Welcome, dear traders. Asian stock markets are declining today following a lackadaisical overnight session on Wall Street. Investors are selling off shares due to the risk of a global recession and grim economic outlook. And the World Bank and the International Monetary Fund downgraded their forecast for the leading economies. Futures on the US stock indexes extended losses in the Asian session. Watch our video review and find out the latest breaking news. Let's start. The reports of large US companies are pessimistic too. For example, FedEx, an international logistics company, reported a sharp drop in shipments worldwide. Hence, FedEx CEO Raj Subramaniam said on Thursday that the recession is impending for the global economy. Naturally, investors took notice of his dismal comments. All three benchmark indexes declined markedly in the last hour of trading, and traders are now looking for clues about future aggressive rate hikes by digesting fresh data ahead of the FOMC meeting. As for the latest reports, US retail sales increased while initial jobless claims reached the lowest level since May. Export and import prices fell and industrial production unexpectedly contracted. It means that the labor market maintains momentum whereas the economy keeps shrinking. Judging by the latest macro stats, the Fed has now plenty of reasons to stick the monetary tightening. Currently, traders are factoring in a 75 basis point rate increase next week. The SME FEDSWATCH tool shows a 76% probability of such a rate increase, so nobody expects a 50 basis point hike. There is an assumption that the regulator could raise the interest rate by 100 basis points. Many speculators are prone to believe in such a likelihood as September 21 is approaching. The US dollar is enjoying a bull run in anticipation of the Fed's meeting as well. It's reaching new all-time highs in different markets. It remains an undisputed leader on forex. In the Asian session, it was trading with a bullish bias, moving in the range of 109.53 and 110.26. On the top of that, the two-year bond yields advanced to a 15-year high amid expectations of an aggressive rate hike. The US dollar index grew to 110.10, so the rise in yields of US government bonds and the rally of a greenback should have exerted pressure on the yen. However, it did not happen. Yesterday, the Bank of Japan made verbal interventions which supported the yen versus the US dollar. Besides, risk aversion also limits its decline as the yen is a safe haven currency. In the Asian session, the dollar-yen pair was trading below 143. However, the yen managed to approach the range of 142.81 and 143.70. Analysts believe that after an unsuccessful attempt to break through the monthly high of 144.99, the Japanese currency may enter the consolidation phase. As a reminder, the yen has become the main outsider in the currency basket. It continues to depreciate, which is a real problem for the Bank of Japan. However, apart from verbal interventions, the regulator has not taken any action. Therefore, a short-term rally is losing momentum due to the monetary policy divergence between the Bank of Japan and other major central banks. Given the strong commitment of the Bank of Japan Governor Haruhiko Kuroda to soft stance, the regulator is likely to keep monetary easing at the next meeting, scheduled for September 22. At the same time, foreign currency deposits held by Japanese households and the companies are growing. Economists warn that it may trigger another sharp drop in the yen. Philip Lowe, he is addressing the country's parliament today, is trying to avoid strong statements. He said that the central bank would make several more rate hikes. However, at some point, it would be appropriate to slow down the monetary tightening cycle. And the Reserve Bank of Australia is determined to push inflation to the target range of 2 and 3%. It also voted to take necessary measures to support the economy. And the Reserve Bank of Australia governor addresses the country's parliament twice a year. since Philip Lowe's previous speech in February. A new Labour government has been elected in Australia and the hawkish cycle has begun. At the last few meetings, the Reserve Bank of Australia raised the interest rate by 50 basis points. Many analysts do not rule out that the regulator could return to the 25 basis point rate hikes as it was at the very beginning of the monetary tightening cycle. And the next Reserve Bank of Australia meeting will be held on October 4. The Aussie is gradually moving away from an intraday high of a 0.6770, its price heading for 0.6673. Sellers returned to the market against the backdrop of a falling US stocks, and the Australian dollar has a high correlation with Wall Street. What's more, the Aussie as a commodity currency is sensitive to the dynamic of oil prices, and they have also been dropping for a while. The AUD USD pair is gripped by bearish sentiment despite a strong labor market and positive economic reports. A rapid rally in the US dollar eclipsed positive reports. As a result, the pair is moving in the downward channel of a 0.6670 and 0.6726. The New Zealand dollar demonstrated a similar dynamic. The Kiwi is gradually edging lower despite the upbeat macro stats. Industrial production in the country has been expanding at the fastest pace since July 2021. Yet the NZD USD pair sank to 0.5950. In the Asian session, the pair was moving in the bearish corridor of a 0.5941 and 0.5987. And that's all for now. Today, ECB President Christine Lagarde and other policymakers are going to deliver speeches. The UK retail sales report, the EU CPI index and the US Consumer Confidence Index are on tap. The Asian session is over, but European and American session are ahead. In our next video reviews, we will tell you about the main highlights. Stay tuned and see you soon.